Dirty dealings, corporate battles, consumer woes. This is Evening 5. A consortium comprising private equity or PE firm KV Asia Capital, Civil Service Pension Fund KWAP and Indonesia's Kapal Group has invested 250 million ringgit into the operator of ZUS Coffee to support its global expansion plans. This confirms an article by the Edge Malaysia Weekly in July this year, which, quoting sources, reported that ZUS Malaysia is close to securing 250 million ringgit in PE funding, led by Singapore-based KV Asia. According to the sources, ZUS was also weighing at least 2 pitches for a billion ringgit initial public offering on Bursa Malaysia. ZUS Coffee founder and CEO Ian Chua said in a statement that the newly secured investment will grow ZUS's coffee business and support its move into new verticals like fast-moving consumer goods. The company, which started operations in 2019, will launch into Singapore and Brunei between September and December this year, adding on to its operations abroad of 50 stores in the Philippines. The statement said ZUS Coffee is currently also in active discussions with potential partners in other international markets and expects to serve more customers across new geographies in 2025. ZUS Coffee currently operates 550 stores in Malaysia. Country Heights Holdings said today that the legal firm which filed a winding-up petition against the company in July has undertaken to withdraw the said petition by this Thursday. This petition arose from Country Heights' failure to settle a sum of 425,060 ringgit in unpaid legal service provided by Messrs. Chalem Wong in relation to its corporate exercise. In a statement, Country Heights explained that it has settled the full payment of the sum without any admission of liability as per Messrs. Chalem Wong's demand. As a result, it said the legal firm has undertaken to withdraw the petition and considers the matter fully resolved. It said that as a publicly listed company, Country Heights remains fully committed to upholding the highest standards of corporate governance, transparency and financial responsibility. It added that this swift resolution reaffirms its dedication to maintaining the trust and confidence of its shareholders, partners and the public. Press Metal Aluminium Holdings said a fire occurred at its Phase 3 smelter in the Samelaju Industrial Park last night. The company said the fire, which occurred shortly after 11 p.m, has since been extinguished and that the affected smelter is owned by Press Metal's 80% owned Press Metal Bintulu. Shares of Press Metal fell to as low as 4.37 ringgit following the news, though it later pared some of the losses to end the day at 4.50 ringgit, still down 3.85%. This values the counter at 37.08 billion ringgit. Press Metal said about 9% of its total smelting capacity across Samelaju and Muka was affected by the incident, which impacted 100 of 300 pots in the Phase 3 smelter. There were no injuries or fatalities. According to Press Metal's estimates, it will take about 4 months to restore operations of the damaged pots. On a full-year basis, it said this impacts about 3% of the company's annual smelting capacity and noted that the affected assets are adequately covered by insurance. The steep sell-off at Globetronics Technology today has dragged its new substantial shareholder APB Resources into a paper loss of 102 million ringgit since it bought into the outsourced semiconductor assembly and test firm. Globetronics shares fell 32.5% to close at 54 cents after the resignation of its external auditor KPMG, which the company said is on a voluntary basis. Intraday short selling of the counter was suspended. Globetronics was the most active counter across Bursa Malaysia, with 86.78 million shares traded, over 20 times its 65-day average of 4.4 million shares. Shares of APB, which owns a 10.36% stake in Globetronics, also fell. ending the day down 4.41% at RM1.30. APB acquired its 70 million shares in Globetronics for RM140 million or RM2 per share back in February. This was already a premium to the RM1.50 trading range of Globetronics shares at the time. At 54 cents per share, Globetronics is valued at RM364.71 million. Taiwan-based printed circuit board manufacturer Elna PCB expanded its manufacturing facilities with the opening of a new RM1 billion plant in Penang's Perai Industrial Zone. Quoting Elna PCB Malaysia President Ian Yang, a Bernama report said the first phase of production will yield 300,000 square feet of printed circuit boards, catering to the automotive, server, network equipment, personal computing and consumer electronics sectors. Speaking during the plant's opening ceremony, he said the company is poised to expand its production capacity to 1 million square feet in the near future, and that it will be able to meet its customers' needs with greater geographical manufacturing diversity and supply chain flexibility. Meanwhile, PSA PCB Business Group President Lance Tao said the inauguration of the new plant is a significant milestone for the PCB sector and that its opening is a strategic move that is expected to enhance the region's electronics manufacturing supply chain. Elna is a subsidiary of global brand manufacturer under PSA Group. Penang Chief Minister Chow Kon Yeow, who officiated the plant, noted that it is expected to create 1,000 more jobs. He said the expansion of Elna, which has a 30-year presence in the state, underlines the robust industrial ecosystem in Penang.